Welcome, ladies and gentlemen, to Commodity TV in a new edition of our online interview series. Today, we want to talk to the CEO of Meridian Mining, and Gilbert Clark, who is the CEO, obviously, is here with us because the company just brought out a fantastic pre-feasibility study for the Cabaçal project. Hey, good day, Gilbert. How are you doing? You must be very happy.
Yes, Joachim, we're very happy with the outcome of the pre-feasibility study. It was the accumulation of 2.5 years of additional drilling, lots of studies, metallurgical, mining, and a real optimization of where the project is.
Yeah, absolutely. No, I mean, it was not only hard work, of course, it was everything came really together. You have a superb project. And I must say, if I look at the numbers, it's almost $1 billion NPV at 5% discount and an IRR of 61%. Pah, gee, those are
Yeah.
fantastic numbers, aren't they?
Oh, yeah. Well, these are the type of numbers that you expect from production assets, and very much the Cabaçal deposit is what we see as a very, very profitable future mine in Brazil. We generated that $1 billion in MPV value, BV5, and again we used pretty conservative
Mhm.
inputs. We used the same ones as before, which was CIBC long-term and analyst consensus. So we used, I think, 2,119 for gold, $4.16 a pound for copper, and 26.89 for silver. So
Mhm.
that, these are far underneath where the commodities are today. So that really shows the exposure that this project and the increased value of the equities that come with the commodity cycle, I think, that we're now entering.
Yeah, absolutely. And I think you also had a spot case after tax NPV then of 1.4 billion. That was then 79.5% IRR. And that was then at $2,917 gold and $4.50 copper and $32 silver. I mean, we are today again higher. Of course, this is just a momentum thing, but I must say it shows the quality of the project, doesn't it?
No, absolutely. Look, most projects, any project can work at higher commodity prices, and ours actually works at very low commodity prices. So
Mhm.
the ability for the Cabaçal to generate future net free cash flow is exceptional, and it is such a simple operation. It's open pit mining, standard conventional crushing, gravity, flotation to recover the payable metals. But most
Mhm.
importantly, what we've done with this pre-feasibility study is to generate a life of mine mid-tier production profile of 141,000 ounces of
Mhm.
gold equivalent um, average each year. And this is very
Mhm.
important to show that it's not a small promotional asset. This is a
Yeah.
long-term, long-life production asset.
Yeah, it's a real asset, I would call it.
Right.
Absolutely. So in the first 5 years, you want to produce around 178,000 ounces gold equivalent. Does that mean you are a little bit, yeah, let's say high grading, or from where does that come? Do you have a good starter pit and then you go further deep, or how does that, from where does that come?
The deposit, what we've done is we've increased the pre-strip to expose a lot more of the ore body at the start, and this
Mhm.
has allowed us to access shallow, high-grade mineralization very early on in the production profile, and that's very important because then that means we can rapidly pay back the capex, which is at
Mhm.
1.4 years. So
Mhm.
that's very important to show that not only can we access this high grade material and have a very, very low all-in sustaining cost in the first few years, but
Mhm.
also we repay back the capex. And this is very important when you're going down the road of funding a mine. Your lenders are going to say,
Yeah.
how quick we're going to get our money back. Well, we can pay back that in under 18 months easily.
Yeah. Would that mean that you can load a little bit more debt than equity, or that you maybe can do most of it debt for the capex?
Look, as a new build for a company, you've got to be uh, uh, project that you're going to get a conservative debt to equity ratio. So I think a very conservative debt to equity ratio for project finance would be somewhere between 65% debt, 35%
Mhm.
equity. I think
Wow.
that's, if I spoke to any banker, they would say that is a very responsible figure. And that's something we want to look for.
Hmm.
Most importantly, in the months and years to come, we want to see the value of our shares dramatically replicate what we see. So we're trading today at 0.16 to NAV, 0.165 to NAV, and I think we look at our peers, we should be trading upwards of about 0.45, zero point 0.5 to NAV. So there's a tremendous multiple in our equities, and that strength of our equities will go towards the future of project finance.
Okay. What is the reason for that low initial capex? Because you have 248 million US dollars. I guess there's also a contingency calculated in, but it also includes the pre-investment for the expansion to 4.5 million tons per year from year four onwards. To my understanding, an open pit, or let's say a mine of that size, normally is, let's say, closer to 300 to 400 million US dollars. So do you have any advantages, or what is the reason why that is so low?
Well, the advantage that we've got is, firstly, we're operating in Brazil, and Brazil is very
Mhm.
low capex, low opex environment. And when we look at the capital intensity per ton of milled, we are right in the middle of the fairway of recent builds in Brazil. So that's indicative of what you expect to get from Brazil.
Mhm.
Um, the Cabaçal deposit, we benefit from having a topography that's very advantageous. It's on a hill. We have the geometry of the ore body, which is flat lying, so we don't have a lot of pre-stripped. In that capex figure, we've also expected that after year four, we'll increase the annual production. The initial production is 2.4 million tons. We'll increase it up to 4.5 million tons. But we're going to put in all the crushing up front will be rated at 4.5 million tons. So then
Mhm.
all the other footwork, the civil engineering, the cableization, everything that you'll need for the expansion will be pre-installed. So basically, when we come to year four, instead of having to mobilize hundreds of people to rebuild or extend, we're going to
Mhm.
go with a smaller team and just add on. So there's an upfront figure in that capex, which is why, compared to the PEA, I think it was circa 180 million, including contingency. We've gone up to 248 million, including contingency. But within
Mhm.
that capex, there's also additional funding for the larger pre-strip. So overall, it's a very good investment for the future. Um, we looked at the economics. It was probably much better economics if we just built a 4.5 million ton plant right from the start. But before you start a 4.5 million ton mill, that's a big old mill.
Mhm.
But you want in this new location with Cabaçal, you want to make sure that all of your logistics, not only logistics of reagents in and product out, the logistics of moving people, moving dirt, all of that. You want to understand that before you take it up to a larger throughput.
Okay, cool. Yes, we were just talking about the throughput already. So we saw that from from the year four onwards, it really goes massively up. Also, we see in that chart you have in your presentation that the grades are then, yeah, further going down, especially at gold. Is there a chance that through, let's say, exploration, or call it aggressive exploration, that you maybe can get higher gold grades, or do you have more exploration potential that maybe the grades over the years, yeah, restart to be higher?
We're actually doing several of those things. So within the Cabaçal deposit, we're targeting areas within the model where we have used geological information that's indicating high grade mineralization, but we don't have the data there. We've used it
Mhm.
for the
Mhm.
interpretations. And recently we announced, I think it was 20 meters at over 6 grams gold equivalent. So we're actually targeting some of these areas which are lower grade to actually increase the overall grade of the deposit. We're very positive what we're seeing in there. At the same time, we have the St. Helena deposit, which is again 2-3 times the grade of Cabaçal. So that's
Mhm.
yet to come into the equation on value. We can anticipate that value, but I think there's a lot of value to unlock there. And at the same time, we're expanding our exploration activity. So when we look at Cabaçal or any of the MS belt, it's not something that sort of starts and stops. It's
Mhm.
something that goes for decades. And this is what we expect to occur at the Cabaçal belt,
Mhm.
to have decades and decades of future discoveries pardon me, and ongoing production.
Okay, super. What would be the relations regarding gold, copper, silver later in the, let's say, in the payout?
So that's a very good question. Depending on the commodity price, which is the
Yeah.
dominant mineral, at the moment within the PFS, it's gold. It's about 55% gold,
Hmm.
maybe 56% gold, and sort of 49 um, copper in the balance in the silver.
Hmm.
Um, but when we look to commercialize, what product do we sell? Well, we sell about projected 20% of our revenue comes from the sale of gold doré,
Hmm.
and 80% of our revenue comes from the sale of, I think it's going to be one of the best copper concentrates coming into the market. It's
Hmm.
incredibly clean. It has high gold content, high silver content, and a life of mine average of 29% copper.
Hmm.
But that is a tremendous grade to have in a copper con. 29%, no deleterious material, and very much sought after by the smelters and by the trading houses, because they can take our 60, 70, 80,000 tons of concentrate per annum and
Hmm.
mix that with 3 or 400,000 tons of lower grade dirty concentrate and make it optimal for smelter performance. So it's a very, when we published that information on the quality of the concentrate, we had a lot of incoming calls on offtake and relationships.
Hmm. Okay. Could you use the silver for, let's say, a stream or something like that to finance the project, or is it too small?
It could be used as a stream. It's not a lot of money.
Yeah.
Streams have certain values. On non-core commodities, I guess we could consider that. But at the moment, we're not envisaging that. We do discuss this with the top three streaming companies. They're all good
Mhm.
people. But at the end of the day, the priority for financing has to be the one which is in the best interest of the shareholders. And that's always been the case with Meridian.
Okay. I see also the process flow sheet that looks really, really simple. So, I mean, this is something which is really manageable and not rocket science, right?
Look, if you're a young a metallurgist and you're attending your first lecture of how these things are supposed to work, well, then yes, that's exactly what you expect to have. We have a 200 micron grind, which is very coarse grind. We have very soft and medium hardness. So it doesn't take a lot of energy to break. We don't have to crush it to fine powder. We
Hmm.
then put that through a Nelson cyclone. We take out 30% of the gold. And then we have a go through the flotation circuit, strip out all the copper, a little bit of cleaning.
Hmm.
But what's important about that flow sheet is time.
Hmm.
That takes about 1 hour. Now, look at, say, a gold mine that might take 38 or 40 hours to leach out the gold. That's
Hmm.
energy, that's costs, that's operating costs. And because it's so quick and so soft, that influences the size of the equipment that you need to buy and install. And that's another reason why our capex is
Uh-huh.
so low.
Okay.
And when we look at that ratio of MPV to capex, I think it's nearly 4 to 1. It's an
Mhm.
outstanding figure. So all
Yeah.
those key numbers that you expect to see in what I think is a world-class VMS deposit,
Mhm.
we've produced. And this is a tremendous investment opportunity for people to really buying shares at 0.16 when they should be, they've got the value growth based on hard assets up
Mhm.
to zero point 0.5. So there's a normal multiple there to be won.
Yeah, absolutely. Yeah, I think the infrastructure is key. We saw that you talked already about it. You have really everything around you. But I think what is also very interesting is that you have a lot of also successful neighbors which are now going in production or are already in production or they have declared commercial production. So that is really fantastic. It looks like that you are in a, let's call it in a perfect mining area. So when do you think you might be then in production and what is going on then with the bankable feasibility study?
A good question. So, in April, in I think what 2 weeks, we'll be launching the feasibility study for Cabaçal.
Mhm,
We have such compelling economics. We're well financed to launch into that feasibility study.
mhm,
That we're expecting that to be finished in the first half of next year. We will then be in a position by early in the second half of next year to be in a final investment decision. And
mhm,
in anticipation of that, and what we've done, we recently had a gentleman by the name of David Halkiard join us, and he's a specialist in project finance. So we're bringing on the skill sets in the executive suite, as well as building up the engineering capacity and technical capacity in country in Brazil
mhm,
to actually execute. And with that, as you can see in that new reserve statement we have for the deposit, it
mhm.
now gives us the ability and the basis to execute the feasibility study and then the subsequent build. It's very important for us.
Okay, super. So that means, of course, the concentration is on Cabaçal to really make that happen. But I think Santa Helena also looks fantastic. What is planned here for this year?
Oh, it's drilling, drilling, and drilling on St. Helena. In December of last year, I can remember we talked about this. We had a quite interesting event. So St. Helena always was sort of 30% copper, 30% gold, 30% zinc, and about 10% silver.
Hmm.
We drilled a couple of holes, 605, CD 605, CD 612, and we hit, particularly in hole 605, over 75 meters at 4.6 grams gold, of which just under 70% of that gold
Hmm.
equivalent was actually gold mineralization hosted within VMS VMS style of mineralization. So that was so important for us because not only does it extend the deposit at St. Helena, but it shows that the Cabaçal belt has now the potential to host large tonnage VMS type gold deposits. So
Hmm.
for St. Helena, we're going to be drilling upwards of 11,000 meters this year. We're very confident that we'll be looking at not only extensional but infill success. And we want to have that same high degree and high quality resource statement published for St. Helena. And I mean, Cabaçal, we're going into feasibility 89% in the proven category, which is
Hmm.
it's a remarkable number. And that underlines that value, that multiple of the current share price. We want to have that same certainty, that same high quality resource statement for the mineralization at St. Helena.
Hmm. Okay, super. So that could be then your second mine, right? By, let's say, the end of the decade.
Very much so, or perhaps even sooner. Um, what we are doing there also is I see tremendous value and tremendous growth in St. Helena. So what we're doing there in the permitting is we actually typically just say, oh, let's just permit a mine and then we'll truck it up to Cabaçal. That's a good way of thinking about it. But
Hmm.
there's tremendous upside in that southeastern extension to Cabaçal. So what we're doing is we're permitting not only as an open pit,
Hmm.
but also potentially as a second hub of refining, which is very logical when you look at sort of the VMS belts around the world. They're not generally there's several mills along the belt.
Hmm.
So we're going to have Cabaçal standalone, and if St. Helena passes a certain milestone of metrics of size that justifies that it's better and economically better to build a mill, well, we've got that permit. So yes, I see
Wow.
the Cabaçal belt really has tremendous upside, and we're anticipating that upside in our permitting.
Absolutely. Who are your major shareholders by now? And I saw also you have analyst coverage, of course. What are the average target prices those analysts have?
I think the average works out to be just a smidge over $2 Canadian.
Mhm,
So we have great coverage from Beacon, Cormark, Raymond James,
mhm,
SCP. They're all very experienced analysts, and it's good to have that type of coverage. And I expect the
mhm.
coverage to grow as we go forward. Um, Sorry, what was the other question then, Hannes?
What's the price target of them, you said?
Oh, the price target on average is about two. but anywhere
Okay,
from
$2. Yeah. And the other
yeah.
question was, who are your major shareholders? What is the capital book looking like?
Okay. Well, the share registry has really grown over the last few years.
Hmm.
We're basically about, I'd say we're nearing 65% now, or establishing 65% of long only funds, high net worth family offices, specialist funds that reach across from America to Europe and the United Kingdom. Our top three shareholders, so there's one is a family office that's called Athaki. The other one is a high net worth person, a very intelligent man called Henry Maxey, that's public again. And then I think number three would be the Jupiter Gold and Silver Fund out of London. And then we have lower down the next sort of tier of ownership, we have some of the largest mutual funds in the world,
Hmm.
assets under management measured in the trillions. We're a small little part in their portfolio, but a lot of these groups are now taking positions in the fund.
Super. So that means when there is let's say, a next raise, maybe next year or whatever, you have those groups with deep pockets and they really are standing fully behind the project that it shouldn't be any problem, right?
No, we've always been we always manage our liquidity. And
Mhm.
at times, I think some of the smaller retail shareholders or observers can give comment on this, but a non-producing small cap has got three things. It has a project, it has people, and it has to have capital. And we've always had capital to advance it. We never run out of capital, and that's very important. And then
Mm.
you've got to attract the right type of capital.
Mhm. Fantastic. Super. So I
And
would say, yeah, sorry.
mm, I was saying, that to have the right type of capital, they pro rata participation, they buy on market, they support the economic development of the company.
Mhm. Fantastic. Super. So to me, it looks like I'm a shareholder, by the way, to say that, but it looks to me like you guys did everything right. And so far, those numbers are outstanding. It speaks for itself. Maybe one last question, but I was asking myself because when I looked at several, yeah, PFS studies, it was calculated with 8% discount. You have calculated with 5% discount. What was the reason for that?
5% discount is sort of a common number used across the Canadian, the TSX. We stress test this. So if we use the base case numbers and an 8% discount, IRR stays the same and the NPV goes to 800 million USD. Um,
Okay.
it's incredibly robust. If we look at some of the lower case numbers, 1350 and gold and 350 copper, we still have I think a 41 or 42% IRR with I've
Mhm.
got that number here actually. At we get a 42% IRR and an NPV five of 578, and we still maintain that NPV multiple to capex.
Super.
It's just an incredibly economically robust deposit.
Mhm. Fantastic. Super. Yeah, that all looks great. I would say let's get in approximately 2 weeks in April that feasibility started, and then you have the full proof of concept, I would call it. And pretty sure we get soon some further good drill results from you guys. And so please keep us posted. And we wish you all the best for that because the world needs your copper, your gold, and your silver. That is for sure.
Absolutely. Thank you very much,
Super.
Joachim, and
Gilbert.
it's very happy to be on the channel today.
Thank you very much. Pleasure to be talking to you. Yeah, ladies and gentlemen, it was Gilbert Clark from Meridian Mining, and you heard it. This is a fantastic pre-feasibility study. Those numbers speak really for itself, and it's a super high quality the project has. But please don't forget that is only Cabaçal, but Santa Helena is only 10 kilometers away. That's the next big boom here, and the really big shot, I would call it, for the future. And I think this company will have by the end of this decade two mines up and running. And for that, the market cap is way too low. They have fantastic shareholders. They don't have a problem to finance themselves, and they have the money to really start now within 2 3 weeks the feasibility study, and that will be the final proof of concept. And don't forget copper, gold, silver. Those are the metals of choice. And I think they calculated so far quite conservative, which is fantastic. So there's lots of upside. You really should make sure that you have a very, very close look at Meridian Mining. I own the share already. You should do the same. Thanks for watching us, and bye-bye from Switzerland.